All right, so Jensen, I'm going to take it head on. The first word that I saw when I was reading the partnership was expanded. So if it's expanded, explain to me why this is a big deal worth spending some time on for the world's investing populace.
This is a huge deal. The partnership we're announcing today is about revolutionizing one of the most compute-intensive industries in the world, design and engineering. Synopsys is pivoting across their company to transform their software and all the tools that the industry, the world's been using for some 35 years to be GPU accelerated on Nvidia. They're going to pivot the company to build on top of Nvidia CUDA, physical AI, as well as Omniverse, so that we could revolutionize all of these tools from EDA to SDA, system design automation, to CAE, to computer-aided drug discovery. This is going to expand the market of computing into the world of design and engineering for the very first time. This partnership is going to be revolutionary for that entire industry, expanding their TAM, expanding the capabilities. You know what's really amazing, Jim? This is really the culmination of everything I showed you when you visited NVIDIA years ago. It's taken this long for us to create the software stack necessary for Synopsys and the rest of the EDA industry and SDA industry in order for them to accelerate the software that they've historically only ran on CPUs. And as a result, we're able to do simulations at a speed and scale unimaginable in the past, so that we could do basically the entire engineering work inside a computer in a digital twin before we have to build it at all. So the type of products we can invent and the quality that we could do and the speed that we could do it at is going to be extraordinary.
Right, Jensen, I think that when you first introduced this to me, you explained to me over and over again, because I was so fascinated by what could happen with a chat GPT with the prompts, was, Jim, that's business to consumer, and it's really, really important. But you better start thinking enterprise. Enterprise is, you were using a number that is 10 times the size of what I was thinking about. Are you still standing by that?
Absolutely. If you look at what we're doing today, if you look, we've been partnering with Synopsys for a very long time. NVIDIA was built on a foundation of design tools from Synopsys and, of course, many other companies like Cadence and Siemens and Dassault. These are very important companies that the entire engineering industry is built on top of. As a result of what we're able to do today, we're able to bring GPU accelerated computing, NVIDIA's CUDA, into the world's industrial sector for the very first time. This is physical AI. This is AI that obeys the laws of physics, that AI that interacts with the physical world. This is extremely complex stuff. It's taken us years to be able to do this. And now, if you look at the world's industrial sector, it's measured in trillions of dollars. So for both NVIDIA and Synopsys and the entire industry, this is a giant expansion of opportunity.
Nvidia declared on Monday that it has acquired $2 billion worth of Synopsys stock at a price of $414.79 per share. The two businesses are working together to develop AI engineering and computing solutions more quickly. After the announcement, Synopsys' stock surged in pre-market trade. In a strategic alliance to speed up computing and AI engineering solutions, Nvidia revealed on Monday that it has acquired $2 billion worth of Synopsys common shares. According to a release, Nvidia will assist Synopsys in accelerating its portfolio of compute-intensive applications, advancing agentic AI engineering, increasing cloud access, and creating cooperative go-to-market strategies as part of the multi-year agreement. According to Nvidia, the company paid $414.79 per share for Synopsys' equity. According to a press release from Nvidia CEO Jensen Huang, our collaboration with Synopsys leverages the potential of Nvidia accelerated computing and AI to reimagine engineering and design, enabling engineers to create the remarkable products that will shape our future. Pre-market trading saw a roughly 7% increase in Synopsys stock price. Shares of Nvidia were down around 1%. Because it produces the graphics processing units, or GPUs, necessary for creating and training AI models, as well as managing heavy workloads, Nvidia has benefited greatly from the AI boom. In order to assist its clients in creating AI-powered products, Synopsys provides a variety of technical solutions, such as silicon design and electronic design automation. According to a statement from Synopsys CEO Sassine Ghazi, the intricacy and expense of creating next-generation intelligent systems necessitate engineering solutions with a deeper integration of electronics and physics, propelled by AI capabilities and compute. Nvidia and Synopsys can continue to collaborate with other businesses in the ecosystem because the agreement is not exclusive. Both businesses will address the announcement at a press conference. In 2023, 2024, and 2025, Nvidia was among the top stocks to own. It has consistently outperformed the market, and as 2026 approaches, investors are unsure if it will be able to do so once more. However, since many investors are beginning to worry that AI stocks are in a bubble, next year might be more difficult. In 2026, where does Nvidia see itself? Although it's difficult to predict, the stock's performance can be beyond its control. There is a limit to how much a corporation can control the short-term performance of its stock. Short-term performance can be significantly influenced by market sentiment, and even if Nvidia's company is doing well, its stock may decline if the market is pessimistic about the future of artificial intelligence. The most widely used parallel processors in the field of artificial intelligence at the moment are the company's graphics processing units, GPUs. These devices are an obvious choice because of the flexibility they offer, their remarkable processing power, and the advantages of the CUDA programming environment, which enables developers to get the most out of them. Other hardware solutions, though, are becoming more popular. Due in part to their reduced costs, AMD's alternatives are beginning to gain traction. Application-specific integrated circuits, or custom AI chips, are being developed by Broadcom in close collaboration with AI hyperscalers. At the expense of flexibility, those chips can surpass Nvidia's for the particular computational workloads for which they are made at a cheaper cost. In Q3, Nvidia's sales increased 62% year-over-year to $57 billion, despite the increased competition. With revenue climbing 66% to $51.2 billion, its data center division, the most closely associated with the AI trend, was even more robust. Nvidia is still far ahead of AMD, which saw a 22% increase in data center revenue of $4.3 billion, and Broadcom, which saw a 63% increase in AI semiconductor revenue to $5.2 billion. The management thinks the outcomes will be impressive for some time to come. Nvidia has sold out of cloud GPUs because demand is greater than supply, according to CEO Jensen Huang. Additionally, Nvidia reported that over the next 5 quarters, its Blackwell and Rubin systems will generate about $307 billion in sales. Nvidia wasn't even making that much money annually a few years ago, much less that much per quarter. The company has grown tremendously, and long-term investors will undoubtedly find it reassuring to learn that there is a lot of possibility out there. As for the upcoming quarter, the IT corporation anticipates more growth, with sales expected to increase by nearly $65 billion and gross profit margins of roughly 75%. It's an absolutely outstanding achievement for a company that now appears to be unstoppable. However, it is currently trading at a forward price-to-earnings multiple of just 23, according to analyst predictions. In contrast, the average of the S&P 500 is a multiple of 21. Nvidia is currently selling at a somewhat larger premium than the index's average stock. Given its strong stats and possibilities, a greater multiple certainly seems justified. However, since a lot ultimately depends on development driven by AI, there is considerable risk associated with the stock. Although AI has a lot of promise, many businesses aren't reaping the benefits of their investments in the technology. A healthy dosage of skepticism may also be justified at a time when the economy appears to be in precarious shape, as there may soon be a decrease in AI spending. Customers of Nvidia, including cloud service providers Microsoft and Amazon, recently discussed their intentions to increase capacity in response to the company's increasing demand. All of this suggests that there is a growing demand for the best-performing chips in the world, which are Nvidia's GPUs. Nvidia's earnings releases should show the results of this AI infrastructure spending story. This, together with the fact that Nvidia's valuation is still reasonable at 38x forward earnings forecasts, may put Nvidia back on investors' buy list. Nvidia may emerge victorious in 2026 as a result of all of this. 71 analysts who follow the stock have set a 12-month median price objective of $225 for Nvidia. That implies a possible 25% increase over the current levels. Furthermore, Nvidia is rated as a buy by 92% of the analysts who follow the company. Analysts are obviously optimistic about the trajectory of Nvidia's stock in the upcoming year. The current decline, though, indicates that investors don't feel that way. A wider decline in tech equities has been influenced by concerns about a possible artificial intelligence (AI) bubble, the sustainability of the large expenditures on AI infrastructure, and the exorbitant valuations of AI-related businesses. This explains the recent decline in Nvidia's stock price. Nevertheless, it might not be long until this tech stock accelerates once more. This is due to the fact that Nvidia is still performing well financially and has sufficient resources to maintain strong growth rates in the upcoming year. Therefore, don't be shocked if the stock actually reaches or surpasses the previously mentioned median price goal. Let's examine why that is probably the case. Nvidia is expected to generate over $213 billion in sales by the conclusion of the current fiscal year 2026, which ends at the end of January 2026. This suggests that their top line increased by 63% over the prior fiscal year. In the upcoming fiscal year, analysts anticipate that Nvidia's top-line growth will decelerate to 47%, reaching $313 billion. Nvidia is capable of more, though. This is due to the fast increasing demand for its AI processors, which has led to the company's purchase commitments for 2025 and 2026, totaling an astounding $500 billion. Of that, Nvidia has orders totaling $350 billion that it has not yet fulfilled. Nvidia can still see a significant increase in data center revenue, even if it doesn't receive any additional orders, which is doubtful given that it keeps gaining sovereign business from nations like Saudi Arabia. Nearly 90% of Nvidia's revenue in the most recent quarter came from the data center division. Based on the $213 billion sales estimate, its fiscal 2026 data center revenue will be $192 billion if a comparable percentage is maintained throughout the year. Since Nvidia is anticipated to fulfill about $60 billion worth of orders in the current quarter, its data center revenue might reach $290 billion if it is successful in turning all of its order backlog into revenue in the upcoming fiscal year. Crucially, Nvidia is attempting to turn that substantial backlog into income. In fiscal Q3, it had a 32% rise in inventories compared to the prior quarter. That was more than its quarterly sales, which increased sequentially by 22%. Better yet, Nvidia noted that its supply agreements grew at a significantly faster rate of 63%. Therefore, there's a good chance that Nvidia will grow the way analysts predict it will in the upcoming year. Don't be shocked, though, if the company's backlog increases in 2026 and contributes to better-than-expected growth. This is due to the fact that data center AI infrastructure spending is still growing at a strong rate. Over the next 5 years, Nvidia projects a 40% annual growth rate in this industry. However, based on the tech-heavy NASDAQ 100 index's earnings multiple of 32, the company's stock price may soar to $238, even if it achieves the $7.43 per share in earnings that analysts anticipate in the upcoming fiscal year. That suggests that this AI stock might rise by 32%. Considering the huge upside that Nvidia can score in the upcoming year, investors should not pass up this great deal on the chip giant, which is currently available for just 23 times projected earnings. However, considering its supremacy in AI, Nvidia might be a terrific investment to hold on to if you're looking at the long term and are willing to wait 5 years or longer. Given the current uncertainty around AI, I wouldn't say it's a no-brainer purchase, but there is obviously a lot of room for growth in the company. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
If you were here and we didn't have the Synopsys, I would be saying, are you worried that to spend on AI for the data center is now well exceeding the cash flows for several of the key companies, for Oracle and OpenAI, and that perhaps the investment in OpenAI that you've made is a little, maybe should be a little more iffy. Are these the kinds of questions? Is the CapEx unsustainable for these kinds of, for the hyperscalers? Are these the kinds of questions that are really just part of the horse race and not part of the fourth industrial revolution that you've taught me about?
Most people only see the tip of the iceberg and they see a partial part of the picture, as you know. I think what's going on at the foundation, we're going through a platform shift from classical general purpose computing running on CPUs to a new way of doing computing, accelerated computing running on GPUs. That old way of doing is going to continue to exist, of course, but the world is shifting to this new way of doing computing. The cash flow of the world's hyperscalers are at the core really about supporting this platform shift. With or without agentic AI, with or without chatbots, the world's hyperscalers would have made this platform shift anyhow, because this is a much more efficient way of doing computing. The general purpose computing has really run its course. Moore's law, as you know, is slowing tremendously. And so the world needs a more powerful, more capable way of doing computing going forward. And so at the foundation, it's that. The second thing to realize is that AI is not just chatbots. Chatbots are incredible. Cognition AI is very important, but AI covers the entire world of physical AI, industrial AI, robotics, sciences, digital biology. AI is going to transform every single industry. This is the part that we've been talking about for a very long time. You and I have been talking about this literally for years. It's just less visible because consumers don't have to use engineering tools that we use from Synopsys and Cadence and others. We don't, our companies use these tools because it's mission critical to us. These industrial applications, these industrial tools where accelerated computing and AI are now in the process of revolutionizing, are foundational to our industries. It's not optional to us. It's mission critical to us. And now for the first time, we're at the tipping point of that, and we're going to revolutionize the industrial software industry with it.